Hi everyone, my name is Piterpakulski. Today we will continue building financial model about customer behavior, and today we will be modeling fixed costs. We will be linking seasonal fixed costs to the moment when we get the first customers. So if we will be adjusting the amount of new customers, and when these new customers appear, we will be displacing the amount of fixed costs. So today we will be working on that. So please like, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will give you the link to the playlist where I will be keeping all these tutorials. And when I completely finish this financial model, I will give you all the links in the description of this video as well. So you will be able to watch the whole process, how I created this model from scratch till the final overview. So first of all, let's very quickly run through what we did before during our previous tutorials. So in our model, all inputs are colored with this unique color, this blue color. Here it is. So all other cells are formulas. So here you can see the formulas. These are the input. So we have 6 types of customers. So we can switch the calculations. This will be needed later
during scenario modeling, stress testing process, when we will be able to see the final cash flow statement, simple, discounted payback period. Here we can specify the duration of the life cycle for this or that type of customer. So for example, after 24 months, this type of customer will disappear. This customer will disappear after 34 months, this one after 55 months, and so on. So we have global and local coefficients to increase and decrease the revenues for different types of customers. All this will be needed further during scenario modeling. So we have global and local coefficients for direct costs. We have global and local coefficients for the amount of new customers joining our project. So we will be able to play with all these inputs globally and locally. Then we start describing the monthly revenues per one customer per each type of customer. So for example, this type of customer gives us monthly these revenues. So this is in line 24. This is the life cycle of this customer. So the maximum of life cycle is 120 months. So this is 10 years. And here we can specify in this line, we can specify monthly revenues that each customer gives to the cash flow. So for each type of customer, these are monthly revenues per month per customer. So here we describe the portrait, how this or that consumer generates the revenues. Then the same story happens with direct costs. Then we specify how many new customers, specifically new customers, join our project, because for example these 20 customers join the project, and from this moment we will start counting 24 months, 2 years of these 20 customers' life cycles. So this we will be able to calculate our revenues the right way. We will be able to see the correct revenues, correct profits. We will be able to see accurate profitability, simple, discounted payback period. So this algorithm will
add realism to our calculations. So this is very, very important, because you will be able to see the right amount of financing that you will need to start your business idea. So then we calculate the revenues, then we calculate direct costs
linked to the revenues. Then we calculate the amount of customers at any given moment inside the timeline. Then we calculate, for example, we have some direct costs that are linked to the amount of existing customers at any given moment of the timeline. So these are the costs per customer. We can switch them on and off. We have global and local coefficients for these costs. So this is all done for the future scenario play. Another type of customers, another type of direct cost may be linked to the amount of only new customers that are joining our project every month. So these are the values of these costs. We can switch them on and off. Global and local coefficients for scenario play. And now we need to we will be talking about fixed costs. So first of all, let's create a new block of inputs. Let's call it fixed costs. Fixed costs. This will be fixed cost item. Here on the from left to right, we will create a typical year. So this will be a typical year. So here from top to the bottom, we will be naming these fixed cost items. So fixed cost item 1. So for example, let's have 10 items. So these are the inputs, so I'm coloring it with blue color. That goes with all our inputs. So these are the inputs as well, so I'm coloring it with blue color. So for example, if we look at different fixed cost items, so for example, some of them may have stable values inside the typical year. For example, other expenses, they may be called fixed, but they may have some algorithm. So for example, they may occur each quarter, for example, like this. Or for example, they may occur once a half year, for example, like this. So I'm just making some assumptions just to show you how this will
work later. Some of direct cost items may have some very specific algorithms. So for example, $3,000 here, then for example $120 here, just for example, and $800 here. Then for example, some fixed cost items may have some seasonality. For example, these costs will occur from April till September. These fixed cost items may occur, for example, during these months, for example, and here. So despite of them all being called fixed costs, they may have some algorithms, and for example this item may be stable during the typical year as well. So all these fixed, so when you have some business idea, you have to try to remember what are your fixed costs, how these costs are specified inside this typical year, because for example in some months like this, for example, you may have some peaks of the expenses, and you can't just divide $3,000 by 12 and extrapolate this number towards the whole typical year, because for example if you place these costs specifically, for example, to January as they really occur, you will be able to see in the cash flow statement, you will be able to see the operating losses, and you will be able to see, so you will need more money to start your business idea. So that's why, despite of these costs being fixed but being stable, but they may have some algorithms inside the year, so you have to distinguish different types of fixed costs among each other. So this is very important. That's why I'm showing you this, all this stuff. So then what I'm doing, so I'm creating on-off coefficients. So I will be using data validation list. Then I'm going to the top. So here we have on-off. I'm selecting this on-off. So by default all of these costs will be switched on, so these are the inputs, so I'm coloring it with blue. Then I'm explaining to Excel that if it is on, I will be placing 1. So if this value is on, I will place 1, otherwise 0. So here, if I switch it off, I will see here 0. Now I will add local and global coefficients for scenario play. Local coefficient, then global coefficient, So we will specify, we will choose the percentage format for this coefficient. So this is global coefficient. Format cells, let's place it in the middle of the cell. Alignment, bottom, let's put it in the center. Okay, so now let's add these coefficients. So let's create a new table. So fixed costs, I will call it fixed cost plus coefficients. So these cells are no longer the inputs. So the formula for these cells will be equals. So I will take this value multiplied on this coefficient globally on off. I'm freezing the column here. Then I will be adding local coefficient, and I'm adding global coefficient. Here I'm freezing the cell completely. Now I'm pressing enter. Now I'm extrapolating this formula to the bottom and then to the right. So what we are fighting for example, we would like to switch off these costs, for example, during scenario analysis. So I'm just doing this and we see how these numbers disappear. Or for example, I don't want to switch it. I just want to look how I just want to, for example, increase all the fixed costs on 50%. So these are the costs with 50% increase. Or for example, I just want to decrease by 30% all the fixed costs. So that's how I am using global coefficient for scenario play. Then for example, the next scenario, I want to increase these costs. I want to for example, decrease these costs, and I want to switch off these costs. I'm just imagining some kind of scenarios, and I will be looking at the cash flow statement and see how much financing is needed in this or that case, in this scenario, that scenario, what will be the simple discounted payback period, what will be the internal rate of return. So I'm not playing with inputs themselves, I'm just using only coefficients to play with all these scenarios. So this is very fast way to test your business idea with by playing with all these coefficients. Then I need to place all these fixed costs, seasonal fixed costs, inside the timeline. So what I'm doing next, I'm just copying the timeline, then let's create a new block. So here I will be placing the name of the fixed cost item. Here I will be placing the names of the articles. So the first step, this will be step 1, and I will place these numbers here, October, November, December. Then for the next years I will be just populating these values. Now let's extrapolate these formulas to the right. So what we see here, so our project, if we go up, so we will be able to see that our project starts at July 2023. So let's color this line, so we can see, because the first customer appears in July 2023. So now we need to crop our fixed costs and start them from July 2023. So what we are doing now, we will be copying this table one more time. So this will be fixed costs step 1. So this will be fixed cost step 2. So what we will do now, we will press equals, then take this value and multiply it on this magical line. This will make our fixed costs start with the right, inside the right moment inside the timeline. So let's extrapolate these formulas to the bottom and to the right. So now we can see, so these these lines will go to the cash flow statement. So I'm coloring it with red. And for example, so now we can see that our fixed costs are starting from July 2023. So what we can do, so what we are fighting for, why we were doing it this way, because for example, let's go. So we have a block of inputs called new customers, and let's, for example, assume that the first customer will appear in May. So for example, we will have 5 customers, and here 5 customers join our project in starting from May. So let's go back, and now we can see that our fixed costs are starting from May 2023. So we don't need to displace these costs manually, so this is done automatically. So our model finds the moment when the first customers appear, and then starts the different types of costs from this specific moment. So this is the scenario play. We don't have to manually specify displays a huge amount of data, so we won't be able to make mistakes. We will avoid mistakes. So this is very valuable. You can create a lot of scenarios very quickly, playing not with the inputs themselves but all with coefficients. So for example, I just wanna switch off these expenses. So now you can see how these costs are switched off. So now we can play with these coefficients very easily, very fast, and this will allow to create a huge amount of new scenarios in new cash flow statements, and we will be able to see how much money we need in this scenario, that scenario. So we will be able to test strengths and weaknesses of our business idea. So this is the process of getting acquainted with your business idea parameters. So these were fixed costs. Please like, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will be giving you the link to the playlist where I will be keeping all these tutorials. And when I completely finish this model, I will place all the links on tutorials in the description of this video as well. So you will be able to watch all tutorials from scratch till the final overview absolutely free. So thank you guys for watching. See you next videos. Thank you and bye.